Hi traders and welcome to the Technical Analysis Market Watch on Friday the 3rd of March. So we've started out the new month with some consolidation at some pretty key zones on the major indices and also some of the currency pairs. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and you can see that we've basically seen a whole week of consolidation at around this 67 level. Like it did hit the 67 flat, which we expected that it probably would do after last week's action. And as you can see, it's a pretty strong level of support. It's a round number, and it's also a very strong level of support. So no real surprise to see price hovering around this area and gravitating back to it. You can see that a lot of the opens and the closes for the daily chart are around this level. So it's pretty important that, we really keep an eye on it. In my mind, if we don't actually get a series of higher highs and higher lows on a smaller time frame to get it back up to the previous level of around that 68-cent mark, and also getting closer to the 20 moving average again, we're probably going to find ourselves stuck in this range for a little bit longer and not really giving us a quality trade. So if you do want to scalp this, I'd be looking for a series of higher highs and higher lows. So a lightning bolt on a 1 hour time frame would probably get the job done. And then we start targeting effectively about 60 or 70 pips to the upside, where we know that there's reasonable resistance there and the 20 moving average is starting to bear on it. But if we get a daily close below the 67, so I'd be sort of looking at the sort of 66.80 mark. If we get a daily close below there, it does look like a very ominous sign that we're probably going to be starting to sell off all the way down to around, in the first instance, probably around the 66-cent mark. You can see that we've got a little bit of support around here, but the real very strong level is actually around that 65-cent mark. You can see I'll pop a horizontal line there. This is where it probably really will find itself if we get a break through that level, because this level here, which is only about 20 pips from where we're entering, the real support would be at the roll reversal zone at around that 65, sort of just slightly over 65 area. As you can see, that was the previous inverse head and shoulders. And now we've obviously had a head and shoulders play out and it's starting to push down. So this is the level I'd be targeting if we get a lower close on the daily. But if we do see a bit of a bounce and a turnaround in the smaller time frames, you can certainly scalp up to that 68.20. We've had a lot of trouble. I don't think we can, you're going to get a lot of headway, and the 20 moving average is sort of calling for the price. And if it gets close enough, it will gravitate to that level. So you'll get a bit of momentum on your side. So pretty good trading on the scalp, but I think you need to be on the lookout for where it closes before you start getting excited about that particular trade. All right, we'll jump over to the US dollar CAD, and as you can see, it definitely hit our target. There's no question about that. It went up there, hit the target that we were looking for, and sold off a little bit. It's still hovering in that zone though, and that you can see that it can hover there for a very long time, as you can see through these candles right here. Realistically, you should have been in, and you probably should have been able to already take your profit at that point. I like to actually take them at these levels rather than preempting what's going to happen at those levels. If we get a rollover and a series of lower highs and lower lows on a smaller time frame, you could look at potentially trading it back to around that 135.20 area, but it is truly a scalp because it's only about 40 or 50 pips away, from your entry point, even if you get that change of trends. I mean, if I go to a 1 hour, I'll show you what I mean. You can see that we're basically flatlining at the moment, but if we do get a series of lower highs and lower lows with some sort of conviction, and this level gets broken, this little mini roll reversal zone gets broken at around that 135.90 area, then we can start looking at targeting down to the 135.20, which wouldn't be a bad scalp. But again, price action has to dictate that. On the upside though, if we do get a break above this level, if we get a solid break, I wouldn't be taking the first break. I'd wait for it to come back, retest it from above, and then we'd be looking at taking a long position from that point onwards, which still certainly has opportunities. I mean, we can really get up to the 138. We've had a lot of trouble, but I wouldn't be taking the first break of that zone. I think it's more important to actually wait for the close, and then we can trade it from that point onwards. All right, we'll move over to the US dollar yen now, and this has just been tracking up. It's effectively got to the 200 moving average, which we thought it might do. Still tracking well away from the 20 though, and realistically, we haven't had a pullback of any conviction that you could easily get into this. Not an easy trade actually on a daily chart. If you're looking at it from a 1 hour standpoint, you can probably find a couple of entry points earlier in the week, but even now you can see that it's effectively flatlining it, and a little bit hard to trade. I wouldn't be, even though technically we have got a bit of a move up and it's touching the 20 moving average, it's touching what's effectively a flat moving average. So when the moving average is flat on a 1 hour, it's really telling you that the market's been sideways for a reasonable amount of time. And although it's touching it, it's not doing it with a lot of momentum. So I would be probably leaving that one alone. Even though it is tracking up, it's probably one of those ones where I think there are better trades. If it starts to reverse from this point onwards, though, and we see a series of lower highs and lower lows, we've got a pretty easy target to aim for in the first instance, around that 134.80 area, and the 20 moving average is trying to catch up to that level. So the scalp is probably to move down to there. If we get a break above the 200 moving average, though, which is above the 137 sort of 30 area, then we can probably start targeting the 138.80 area, which is still a reasonable amount of pips. But in saying that, it's got to do it first. And I'd like to see a pullback before that happens, because that makes it more technically sound for me. I would prefer it did that. So I'm not getting overly excited by this one, but it's certainly got potential to get the job done on both sides. We just need the break to actually happen. But if you are going to scalp it, I would keep those ranges between the high and the low of the last 4 periods, and just scalp in between those, and then look for a bigger move when we get that break on either side of those 2 levels that I just talked about. We'll move over to the US dollar now. So this, as we can see here, the dollar index is basically pulled back to almost a 20 moving average. Didn't quite reach there, but that probably really demonstrates the strength that this has got at the moment. By that, because it's showing strength again. We know there's resistance not very far away at around the 105. I mean, it kind of just nearly got there, obviously last week, but it's trying to get there again. It's a difficult one to trade from this point anyway, but the euro is obviously the one we're going to be wanting to trade here, and it did the job perfectly. It came down, it touched the base level that we were expecting it to touch, it found support where we needed it to find support, and it also moved up and found resistance where we fully expect resistance would be. So that was a pretty easy trade, I think. Hopefully you were able to get hold of that one, because realistically, when you see resistance overhead like that with a 20 moving average bearing down on you, it's the only place you can take profit. And if you're staying in those sorts of trade, it's going to make it a very difficult proposition for you because you've got basically just a lot of problems in front of you. With trading, you really want to be money. It's just like a river. A river's going to flow the path of least resistance, okay? And price is no different. So if we're looking for a potential take profit, we don't want a lot of obstacles in our way. And on the flip side, we want as many obstacles as possible in between our entry point and our stop loss level. So it goes both ways. But when you're looking for a take profit level, they don't come better than a 20 moving average and a resistance point at a roll reversal zone. So it did just that for us. Now it's found itself right in the middle of that channel. So realistically, if you're going to scalp, take short-term momentum on, say, a 1 hour or 15-minute chart. Nothing wrong with that. You could do that throughout today and maybe early into next week if we don't see a big move up on either side of this. I'm not really fussed either way, but for me to go long, it needs to get above the 20 moving average and be trading up there next week. If it doesn't do that and is hovering above the 107.30, I'm not really interested in long positions on this one. I'm not going to be, I would prefer to go with the momentum, and the momentum is definitely down. We've got a series of lower highs and lower lows. We've got 20 moving average. We've got all sorts of trouble in front of us. I would err on the side of moving down, but in saying that, the smaller time frames will dictate that. If we get a series of lightning bolts in either direction, I'll be happy to take either of them, because I think both of them are good trades. But for me to get serious about a long, it's going to get above the 20 moving average. And if it happens to break down past this support level at around the 105.50 area, then the next logical target is going to be this area here around the 103.50, which is a decent amount of pips away. So it could be a very good trade if we get that daily break below that level. But look for scalps in between this band here and this band here, and use them as your targets for the short-term position, and wait for a break of either side of those bands before we start looking for a swing trade for a bit more of a move on that one. All right, the last one we'll have a look at is the S&P, of course, the all-important S&P 500. It's found support at the level we hoped it would. So realistically, the 200 moving average has held up here. Look, it's still in a downtrend, and it's got a bit of work to do before it actually goes up. But that said, it's likely that it can pull up to the 20 moving average and find a level of support around that sort of 30 to 40. I'll draw a horizontal line there. That's the level that I probably expect support's going to be, mainly because we've got quite a bit of interaction at that level through there, right through these levels here, and resistance there and support there. So it's a logical target for it to aim for if we get a little bit more strength. If we've got a series of higher highs and higher lows on a 1 hour or 15-minute chart, you can follow them through, take the pullbacks to the 20 moving average and trade them along to that level. Okay, if it takes a while, the 20 moving average is going to catch up, and that's going to form an even bigger resistance band. So be very, very mindful of that bearing down on it. but that's my short-term target for the long, around that one, the 40-20 to 40-30 area. But of course, if it turns around and breaks lower than the 200 and actually closes below the 200, in the first instance, we're aiming for the 39, and that's an absolute scalp because it's not very far away from the 200 anyway. You're only talking about 20 or 30 points. So just be very mindful of that. Make sure that the risk reward is actually worth taking that trade. And then if it fails and breaks through the 3900, then very, very clear target down at 3800. It's very, very technically sound. The S&P has been for a long time. All the levels have held up very well, and it finds itself in a position now you can trade it both ways with confidence, as long as the smaller time frames are actually playing the game and you know exactly where our bands are to take profit and also put your stop losses. So I hope you've had a great week's trading. I think we've had some nice consolidation at these levels, but there has been enough movement to get you into scalps. If we see the breaks late in today's session or early next week, I think we can start moving to the next big bands, and we'll see where the markets take us. Have a great weekend, everyone, and I look forward to seeing you all next week.